Good afternoon, traders. This is Christian from Hertz Trade Group, and it is Tuesday, February 8th, and this is your end-of-day market video. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information, education purposes only. So let's get right to the market performance. A little bit different than what we've been seeing. There wasn't a major sell program that really washed through end of day. So as I've been saying just about every day with this market and what it's been like over the last couple of weeks, one day is not a trend, but definitely some nice performance for the day and participation. So S&P was up close to 1% for the day. So very nice, up 80 basis points. The Qs were up 1.1%, and they made a nice rally over the session. They rallied over the session 1.5 percentage points. So you got to be pretty happy with that for the day. IWM also quite strong, up 1.7%, and the microcaps up there too. Interesting, which I thought this is kind of an interesting observation, and what we saw on Friday too was that yields are going higher, but it's not really affecting the market like it was a few weeks ago when yields were going higher. So we'll look at these charts in just a second. Just to round out kind of the macro review on the top here, is that the VIX was also down. The VIX is close to 21 at this point too. So that's been moving in the right direction. So let's talk about the indices and let's talk about bonds. So what I see right now in the S&P is that after a couple days of what I was referring to as just sliding, after kind of getting into like the 20-day moving average, we kind of ran out of steam. We talked about how that there was some end of month, beginning of the month buying, and then not much follow through after that, depending on the day and the price action. But this is nice. We kind of sat back and tested the 200-day moving average as we did on Friday too, which had a bounce to it. But Fridays are kind of, I don't put too much faith in the Friday move because I do feel that it could be a little bit more short covering than actual buying. So we're back in here to the 20-day moving average, and we're back above the 5-period moving average. So let's see if we can build off of this and start to kind of go, up and to the right a little bit. And I do like the fact that we have now we've back tested the 200-day moving average a couple times, right, since we broke through this, and so far we're holding it. So that's some progress to me. We're still in value for the week on the 1 hour chart, right? This is basically where we opened for the week, right at the point of control. So we haven't made that much progress, but at least going sideways and maintaining a little bit to me is somewhat constructive. And 4540 I think will be a level that I think we may come upon this week, and it will be tested. All right, so that'll be something to watch, is 4540, and then if that does happen, then we're kind of getting back into last week's high. The other observation to make so far, because again, this is kind of like baby steps a little bit, just very incrementally, testing things and holding. But this 200-period moving average, I think, was constructive too, that we did not break this. Okay. Personally, how I'm kind of handling this market, and I'll kind of get to this as we go through the video, but I am holding more, let's say, S&P type stocks versus straight up growth in the Qs, call them. So for now, I'm letting this 200-day moving average kind of really be where I want to be involved in this market versus more into cash. If we start breaking down below the 200-day moving average, there's still a number of scenarios we can test. We can make a higher low, or we could take out those lows, all of which is going to be kind of a painful process. So if that happens, that's kind of my plan of action. Let's go over to NASDAQ or the Qs. They look a little bit different here, right? We know that we tested that 200-day moving average to the upside and failed basically there. So the good thing is, we haven't broken the value area for the month. Might as well put on some labels for you so that you could go along and you could jot these levels down if you need them. Again, I look at the futures because they trade much more than the ETFs, and they also trade continuously, except for the small time frame when they're closed. So you get just a better picture and in my opinion. So 14,355, that's the level that needs to hold. Also on the 1 hour chart, right? Again, a little bit different here is that we did come in and we tested support and it held. We also went below this same 200 period moving average that's lit up here. And we're holding this. So the way that I also kind of look at these is that we're now above and kind of in the short term, right? I look at the short term for these little clues, short-term clues. So once we got above this 200 period moving average, we've basically been staying above it, except for a couple tests in here. We've been staying above that. So really, if this breaks down, right, if we break below 14,484, or if you do want to level in the Qs, right, and we came in and tested that, this 353.77, if we lose that, right, then as well, I'll change my point of view a bit for this market, right? Then I view that we've got more issues on our hands. But for now, it's not a great picture by any means in NASDAQ in the NASDAQ 100, but we're holding in there, right? We're holding in there. So again, what I would like to see is a move back above the 200-day moving average, and we'll just kind of have to wait and see how that happens. And the way that I'm handling this, I talked about how I am mostly holding, more S&P type related stocks. It doesn't have to be energy. We'll talk about energy in just a second, but could be energy. It could be energy, but it's also the commodity names that are acting really well, the banks that are acting really well, and then just select areas inside the S&P. All right, so that's that. And then lastly, IWM, right? Still still the problem area, and it remains to be seen whether or not, again, nice performance today. So I don't want to say that this was bad or anything like this. This was a nice day for this group, but so far this could be a bear pennant. We just don't know. We're still below the 20-day moving average, right? And that kind of goes along with the situation that's going on in the Qs. Sometimes you just need more time, right? And there's nothing wrong with, I was talking a little bit about this on the, I joined Benzinga today at lunchtime. There's nothing wrong with not knowing, right? If you don't need to put on another indicator on your charts or something to give you the answer. I know everybody likes to figure things out right away, but sometimes you just need more time, and you can't really make a determination here. I hate to tell you, but you can't really make a technical determination here to tell you much with the price below the 20-day moving average, with the price below the 50-day moving average, with the price below the 200-day moving average. So it's trying to get out of this possible bear pennant, and that would be a great thing if we start to move above there, but we haven't yet, right? Also on IWM, it's nice to see us get above, doing something a little bit different for the value area for the week, right? Now you can basically, if you want to, trade against this 202.24. That'll be a really nice level for us to build off of, for IWM to build off of. All right, but just understand with this market and how difficult it's been on a day-to-day basis. If you can't if something isn't jumping off the page to you saying, hey, this is what we have, or this is an easy conclusion I can make, then you just move on to something else, right? And it's like the same way with a stock too. If it's too difficult, right, there are so many other stocks out there or areas of the market that you can be. So for me, this does not look all that good, but the picture could change, right? And getting back above the 20-day moving average would be a nice development. All right, I mentioned I would talk about bonds really quickly. So yeah, we did break the level. So again, this is the 30-year bond, right? This has nothing to do with what the Fed is doing. I always get questions about this, so I try to make sure that I give a proper description. When we're talking about bonds, right, and specifically the 30-year bond, we're not talking about what the Fed is doing in terms of raising interest rates. That's the super short term, right? That's not pictured here, right? What we're looking at is what interest rates are doing out to the 30-year treasuries, right? Remember, when the Fed raises interest rates, that's the Fed overnight rate, okay? That's the super short term rate. But in this chart, what we see is we have taken out this March 2021 level. So what I find particularly interesting is right now, we're not, as bond yields are going higher, and they certainly are, especially on this long end of the curve. We're not seeing any that volatility pick up right now in growth and in the Qs. That may change, but it's similar to what we saw on Friday too. Right. So here's where yields are at. Right. The 30-year is now 2.2. Right. The 10-year is now 1.9%. Is very close to 2%. Right. And here's what the chart of this looks like. Again, when we look at the bonds, of course, it's an inverted relationship. So when bond prices go down, yields go up. So here's just a chart of the yield. Right. And this is what it's been doing. Right. So this 10-year, right, is definitely over where we were. So if we can go back 5 years on this, where we were back in here. Right. So we're now above that, but we're not as high as we were in 2018 or 19. So I guess you could say that that's kind of positive, but this will be a development to watch, as if yields continue to go higher here, whether or not that's going to be affecting the price in the Qs. And again, I don't have the answer for that. It's funny, when I pose a question on Twitter, everybody comes back, they think that they have an answer. Oh, well, then it must be this. Right. Sometimes you just don't know, and you got to just observe. Right. There's too much of that on Twitter. Sometimes when I post something, whether it's just an observation, right, or hey, this is going on, everybody thinks that they can figure this out right then, right? Like it's an immediate, they're going to solve it right then. I'm telling you, it doesn't work that way in the markets. You got to, you make adjustments, right? And that's why I'm going through in this video. Here's what I will do if this happens, right? Then that doesn't mean I'm not going to incur a little bit of a loss, right? That's another thing. I think people want to figure it out so quickly because they're so afraid of losses. If you are so afraid of losses where you need to make a decision right away, I could tell you, and I'm not trying to be mean, but trading is probably not for you. You're not going to figure everything out, and you're not going to be able to get through this market if you're not correct. And not everybody, you're just not going to be correct 100% of the time. The best of the best, the pros, are right like 52% of the time. So you just kind of have to get it through your head that you're going to be wrong from time to time, and you have to make adjustments and realize that you're going to be wrong. The whole name of the game is that if you have an idea and you're involved in some trades and they don't work out, you take them off for a small loss, right? And then you reassess. Right. And that's that's the job of a trader. But again, being comfortable, that's what's called, making risky types. Not risky types of decisions, but if you have trades on, you are holding risk. And there's a reason why it's called that, right? Because there's a chance that the price action is not going to do what you think it's going to do, and therefore you make adjustments, right? So stop prices, right, are getting to the conclusion here is that the way that I'm trading and the way that I normally trade is to make sure I'm honoring stop prices, right, and to ratchet up stop prices, right. So when you do have a trade that works, right, you bring up your original stop price and higher, right. That's called trading, right. It's not like forecasting like, oh, this is where I'm going to take this trade off, right? You want to be able to let your winners run when the market is working, right, and not be that mechanical, right? So again, if you're new to listening to my videos, I am a trend trader, and that means that you want to follow a trend as long as you possibly can, right, as the name is going up. So again, these principles sometimes are newer to new traders, but that's how generally people make outsized profits is when they're sticking with something while it's working, rather than trying to pick a top in a name. All right. So again, a lot of description I'm giving you in today's video, because I feel like I haven't gone into a great deal of description lately. The market's been, a choppy mess. So let me get to some of these areas that have been working really well besides just the indices. So a couple of things that I noticed, right, have been. So first of all, crude, right, took a breather today, right? We hit what's called the virgin point of control. And so I think this is fine to see energy take a little bit of a breather and maybe a little bit of profit taking. and some other areas. And you don't have to go too far. You could basically just look at what's going on in the commodity space. So Alcoa broke out. It was up 9% today, right? And didn't really give back that much of the profits for the day. So very, very strong. FCX, which I view has been a harder trade than this. Alcoa has been the best commodity name that I've seen, in terms of equity play. But FCX is starting to move back, right? So you got to move back above this downtrend line, right? Even though copper's not moving up like aluminum is, I think Freeport may do some other things. And this broke out of the value area for the week, right? So FCX doing something pretty decently. There is another aluminum name, which is CEIX, which had a real nice day, up 13%. Also, if you like this name, you could use the 25 level to see if this thing wants to break higher. Right, so there's a target that potentially that you can maybe take at 29.40 for CEIX, but these areas have been very, very strong, right? And we talked about Alcoa. I thought Alcoa was on the cusp of a break higher, and this is one of our weekend watch list names on Friday, right? Took out and broke through. All right, and then of course the agriculture names have been super strong. DuPont kind of joined the strength club today. I actually put on a position for a little bit in DuPont. Right, DuPont is one of those names that's kind of been missing from this move in in the agriculture space. NTR was a name that I've been watching. Right, this broke the downtrend line. Took a little bit of time, but I like the little cute little back and fill in here and then go. We've been seeing that in some stocks, right? Breakout, digestion, and then push higher, right? I'm still long some CF, right? I took some profits in this. I'm holding a little bit of a piece, right? I want to stay in a name that's trending. A little bit of a back test in here to the 20-day moving average. That's fine. Stocks aren't supposed to go up in a straight line all the time. Let this kind of digest a little bit, maybe put in some type of consolidation and then break higher. So that's what I'm looking for in CF Industries. And of course, this one I wish I have traded, but I haven't. But Archer Daniel Midlands has just been absolutely on fire. Although the moves have been getting a little bit smaller up here, it's still out to new highs. So really, that's where a lot of strength is. Deere had a huge day today. And if I take these labels off, which I'll do right this second, you'll be able to see the price action a little bit better. But nice move through value. Deere's a name that reports, I think, in about a week or so. But again, really nice looking chart here, right? It's taken patience, this name. Break higher, came all the way back into 200-day moving average. Looked like it was ugly for a bit. I think I was stuck in a name and I was stuck in Deere in here, but I'm happy to try it again. And you look at the weekly chart too, and if it closes here, I mean, how can you not like the consolidation for 6 months after a huge run? This stock went from 161 to 397, has spent, and this is sometimes what stocks do, is they'll consolidate after a big run. All right, and then you hope that they resolve higher. Now, again, the only thing that's kind of in the way here is earnings, which comes on the 14th. All right, so we'll see how that works. But again, very strong. Next group, another group that I've been talking about. So again, the reason why I'm going over these names, and I know they may not be the most exciting things out there, but this is the stuff that's trending. And you could make money trending. I talked about this in yesterday's video. I said, I don't know why so many retail investors, when no one is forcing them to, but they're like, I got to own growth stocks, right? You could own anything you want to, and you could come back to growth stocks if you truly love growth stocks, right? Come back to them once they're acting better, once they're back above the 50-day, the 20-day moving average, and once they're trending again. In the meantime, there's plenty of things that you could look at right now. As long as this market kind of holds above the 200-day moving average and the S&P, I think that there's areas like this. Right, so KRE's been acting well. I certainly have talked about a number of names and the regional banks that have been doing well: the Ozark, the Key Corp, the Fifth Third. Morgan Stanley went up another 1% today. I'm hoping that this continues. Again, it's been, it hasn't been a real easy trade, but it's got some momentum to it, a little bit. The other thing that I wanted to point out with Deere, by the way, is the volume. right? Look at the volume today on the breakout in Deer. Very good volume, right? Kind of confirming that move, right? We like to see the strong volume. I'll say this really quick. We like to see the strong volume in stocks that are breaking out. In the indices, remember, we like to see low volume. High volume in indices means distribution. Again, if you're not familiar with this concept, take a look at any time the market has rallied. It's always on low volume, right? There's nothing, always, but usually. Take a look at all these times where the market has rallied and look at the volume difference, right? I hear this all the time, that you need strong volume in the market on rallies. That is not correct. Right now, again, single names, we like to see strong volume on breakouts, but for the overall indices, you tell me when you've seen a sustained rally on high volume. It doesn't happen. It happens on low volume. The reason why, too, without going too far off tangent, is when institutions are accumulating, they're doing it little by little. When they want out of the market, they're like, get me out of everything. Sorry, not of everything, but a real quick example is, let's say they're accumulating, they're getting involved in a name. They may pick their spots. Hey, I'll buy some shares today. Hey, I'll buy some shares in a couple days, right? I'll buy it here, right? When they eventually usually want to get out of a name, when it hits their whatever their price target is, or if something fundamentally changes, they sell all of it, right? And that's where you see the big volume. Again, generally. So sorry to go off tangent, but I'm just spending a little bit more time in today's video. So a couple of things that I thought were, that I've been positioning in. Again, not exciting at all. American Express. Why? And I talked about this last week, because it's a reopening play. People are booking travel, right? And if you think I'm joking with the travel names, take a look at what the travel names are doing. Look at Marriott, look at Hilton, right? They're all breaking higher, right? Doesn't this look different to you, right, than just looking at 20 software names and saying, oh geez, what is the software name going to come back, right? So LYV was something that I traded today, right? And again, I'm not perfect. I'll show you the next chart where I bailed on a name and it rallied in my face. But LYV actually got to this 1 hour VPOC. I was just looking for a quick trade. Hey, it took this thing out pretty decently. Maybe it's going up to 120, right? And that's a name that's been pretty strong all along the way. The name that I got out of that, I'm crying a little bit because I did stay in this for about a week and just nothing happened, was Expedia. So again, another reopening type trade. So all this nonsense that's going on with Peloton right now, right? Peloton, and I know there's a high short interest and it's interesting. Maybe somebody's going to buy them, even though no one has actually confirmed that they're going to buy them. But all these names are going up that are reopening right now, right? Do you want to be in a name that is like a Zoom or a Peloton right now, just because the stock price is low? What's the future? Do you think more people, once it gets warm out, do you think more people are going to go inside and take bike classes? Or do you think people are going to be outside in biking and running, right? These are things that you have to think about. So is there a reason why Peloton has gone down as much as it is, right? Was there a reason why Peloton went up as much as it was? Were there little options to what you could do a couple of years ago, right? So I'm not saying anything bad about Peloton. I'm just saying, forget about where the stock was, right? And saying, oh, geez, it was at 70. Maybe it goes back up there. How about thinking about what do you think is the path going forward for Peloton? Do you think everybody is going to, stop going to those who are those who are working out? Do you think that they're going to want to stay inside and be on a bike when it gets warm outside and take those bike classes? Maybe that's how you work out and how you allocate your time. But do you think that's going to have the same demand as it was before, as the country begins to kind of reopen again, right? We're hearing about mask mandates being dropped all over the place, which again, in my opinion, is a pretty damn good thing, right? But I could tell you personally, and I give my opinion in these videos all the time, when it gets warm out, I will be out riding my bike. I will be out, as long as I don't, knock on wood, as long as I don't have any injury, I will be out hopefully running, right? Or walking, right? So again, I have nothing against their classes. I've taken their classes. They're great. Their instructors are great, but I have to think about these things. All right. But in regard, a trade is just a trade. Any name that you're in for a day trade, you don't have to figure it out more than just that, than what the stock is doing. The semiconductors. Okay. So that's where the strength has been. And that's where I'm kind of more involved in terms of swing trades right now. But there are some bright spots. The semis, right? I think of the semis, if they are back, they're also staying above the 200-day moving average. I should have taken this trade today, shoulda, woulda, coulda. Marvell, really nice day today, up 6.8%. ON Semiconductor continuing from its strength after earnings. So very nice, now above all the moving averages. You have to kind of love this. And AMD had a nice day today too, but still AMD, it's going to hit some resistance at some point here, and it's not above the 50-day moving average. If I had to choose, right, I would be trading, and again, I didn't take a position on in any of these, but I think this, the Marvell, which has support here at 70, I think just looks a little bit better than, even though I love the company AMD and I'm thinking about how to put a position on, but I'm wondering what's going to happen once we get into here, right, and get into here. Now that's $5, $10, $15 up higher, so maybe that's not the worst problem to have at this point. All right, so that's a couple of the semiconductors. Retail names were also strong today. Clean energy, ENPH had a monster of an earnings report, so would love to see this name get going. Notice where this thing got to in the after hours, right up to this 1 hour VPOC. Actually, it's actually above there. So 167 will almost get this thing back above the 200-day moving average. Again, some of these names so beaten up, right? So this will get the stock somewhere up in here. Right? A couple other areas of the market that I'm watching. Would love to see biotech get going. Right? Biotech still so beaten up. Even after it's gone all the way down here to 92, still just a mess, this group. Right. So I'll be watching, looking for some things to kind of change around here in this group. But for now, they're in downtrends, right? So just, again, completely handling things different. There was some interest in the home builders today. There was a little bit of ITB home builder. There was some open calls that went up a lot. I think that's specifically for Zillow, but what do I know? That's just a guess. Zillow reports later in the week. We talked about the metals and mining. The Chinese internet names were very strong today. Right. One name that I keep, so still hanging on to this bottom of value on the weekly. Again, really, tough chart, but it's still holding 35.60. The one name that I continue to see the strongest is PDD, right? I just see that the price action is a little bit better. What did JD do today? It's JD back above trying to get back above the 200-day moving average. So that would be something if JD can actually sustain above the 200-day moving average. In the tech, notice I just didn't talk too much about the tech names. This Gartner name, you may not be familiar with this name, but it has been such a strong name on earnings, right? Sometimes I like the names that people don't talk about, rather than everybody talking about the same name. Like for instance, everybody this weekend talked about Bros, right? And when everybody gets into a name, sometimes it just becomes difficult. It pops, then drops, and I think it has a lockup this week. But yeah, I'll be watching this IT. Another name that I am interested on the software side is ServiceNow, right? It had good earnings. I would like to see it get back above the 200-day moving average. It's almost there. And again, the reason why that's important to me, right, is because it's a big psychological barrier, and I define above the 200-day moving average as uptrend, below the 200-day moving average as downtrend. And also, if I get into a trade, I can use that as my stop. So I know exactly where I can get out of the name if it's not working for me, and hopefully for like, a small loss at that. All right, guys, that is it. Let's see, did I want to go over anything else? The insurance names are also acting very well. There's a couple other just select names in there that are doing pretty well too, but I'll leave it there because I think the video is long enough. Have a great night, everybody. See you tomorrow.